of the Agarwal Chartered Accountant Society is forming a WhatsApp group which has close to 300 active members, through which there is knowledge dissemination which is happening among the Agarwal CAs. We wish to replicate similar groups in various parts of the country through which such similar knowledge dissemination can happen. This is one of the future activities on which the society is looking to work on. Other than this, ACAS is also, other than experienced speakers, we are also promoting young speakers who can come on this platform and address CAs on their areas of interest. So this is all about the society. I now request for continuation of the proceedings. Thank you.
Thank you, Alok Bhai. Now I'll request CA Vaibhav Adukia to please introduce our today's first speaker, Mr. Deepak Bholusarya.
Hello, good afternoon, everyone. It gives me a great pleasure to introduce today's speaker, Mr. Deepak Bholusarya ji, who is going to give us inputs on Budget 2023. Deepak ji is a commerce graduate and a fellow member of ICI 1998 batch. He is a partner in Daksham and Company LLP Chartered Accountant with offices in Delhi, Hyderabad, Mumbai, and Noida. He is one of the breed of chartered accountants who have embraced technology in their day-to-day professional life. He is also an IT man in North India CA circle. He is a regular YouTuber and is connected with all major tax CA and associations of country as life member. He has also completed various certificate courses of ICI on information system audit, blockchain, valuation, and indirect taxes. A seasoned professional, author, and a speaker with 24 years of experience. He is regularly imparting consultancy on recent change scenario to his senior colleagues and members of ICI to abreast themselves to grasp the nitty-gritties of GST, information technology, e-filing, auditing, and other subjects concerning professional. His industry experience includes e-commerce, manpower supply, automobile components, education and education services, telecommunications, packaging, information technology, dental care, civil construction, manufacturing and service, and NGOs. His clientele ranges from SMEs to Fortune 100 companies. Experience in handling various kinds of assignment, including management advisory, assurance, forming internal control, joint venture, management buyouts. He has spoken on various forums like on national television, various study circles, bar and other association, industry forums, Chamber of Commerce, Chartered World, various branches of ICI, in-house client and other fellow clients. NIRC of ICI awarded him prize for his contribution as speaker in seminar for various years. I would like to thank ACAS team for giving me this opportunity of introducing such a great speaker for today. Now I would like to hand over to Deepak ji to provide his input on today's session. Thank you.
A very good afternoon to everyone. Am I audible?
Yes, sir.
Yes, you are audible.
Yes, sir.
A very good afternoon to everyone. Thank you, Weber, for introducing me. Thank you, Ravi, for inviting me to deliver my talk on Agarwal's Chartered Accountant Society and other fellow Agarwal members. I'm also a Agarwal. Though my name is Bholusarya, but I am an Agarwal. I am a single Goti. Bholusarya is nothing. It's just the name of my village from which my ancestors are hails from a particular village. Anyway, today's topic is decoding budget 2023. Ravi, before I proceed with, I would like to know what kind of language you guys prefer. Do you want purely in English, in Hindi, or mix of both Hindi and English?
Mix of both should be fine. There's no problem.
Okay, that's
as per your comfort.
That's great. That's great. No, you see, comfort should not be of the speaker; it should be of the audience, right? Because
No.
Sometimes if I keep on speaking English, sometimes I get the message, sir, please thoda Hindi mein bhi bol dijiye. Or if I keep on speaking, somebody say, sir, English, please. So I need to know what is the mood of the audience.
No, I think a mix
I'm
of
not-
Hindi and English
I'm
should
not
be fine.
interested in the mood of the nation. Mood of the nation, we all know.
Predominantly English with like mix of your
Sure,
humor. In
You see,
Hindi.
already I've got the message.
Yes.
Sir, English, please. So that's why it's very important that I should know what kind of my audience is. Anyway, so let me share the screen. So as I believe that I have approximately 1 hour and 30 minutes to deliver this particular piece of budget, right?
That's including Q&A, sir.
That's including Q&A. Okay, so it means that I'm left with actually 1 hour rather than 1 hour 30 minutes.
Yeah.
Since you see, budget is a very technical budget, it's a very wide budget. So I may not be able to cover each and every aspect of the DT, but I will try to take up most of those aspects which touch upon each and every common chartered accountant, right? Like a common man, I'm referring to as the common chartered accountant. So I will start with the individual taxation part first. If we look at the old scheme, we are all aware of what is old scheme and what is new scheme. New scheme is under section 115 BSC, and the old scheme is as per schedule 1 of Income Tax Act, or sorry, Finance Act, read with other provision of the act, right? So if I look at the old scheme, there is no change as such. For first 2,50,000, it's still nil. 2,50,000 to 5 lakh, it's still 5%, and so on and so forth. Again, referring to the surcharges rate, these are still the same. There is no change as such, but there is a change. And the change is that the old scheme is not a default scheme now. So going forward, the new scheme under section 115 BSC shall become your default scheme. So what does it mean? It means that in order to have this scheme or have this scheme applied to your taxation, you need to file a form, right? If you are a business assessee, or if you are an assessee having an income under the head PGBP, then you need to file the form. Till last year, since the new scheme was not a default scheme, and in order to opt for that scheme, you had to file that form. Similarly, now going forward, in order to apply this scheme, in order to avail this scheme, you need to file the form, but only for business assessees. And for non-business assessees, similarly to the previous year, if you are not a business assessee, you can simply file your return, and in return itself, you can opt for the old scheme, but with the caveat, and the caveat is either the form or the return, as the case may be, must be filed on or before the due date, right? As far as filing of form is concerned, the separate form is concerned, it needs to be filed first time and before the due date. And going forward, there is no requirement to file this form. But as far as the assessees where form is not required to be filed and they want to opt for the old scheme, though it is through income tax return only, but again, that return needs to be filed within the due date. So if you are filing a belated return, I'm talking about non-business assessees, then you can't opt for old scheme. So these are the caveats. And being a chartered accountant, it's our responsibility that we should advise our client whatever scheme is appropriate for them, whether it's the new scheme or whether it's the old scheme, as the case may be. Now, the major push, it seems, of the government is to push the new scheme. Why? Because actually there were no taker for the new scheme. As per the data available, hardly 3 or 4% people had opted for the new scheme. Even yesterday, we were conducting similar kind of session with our fellow chartered accountants, and we run a small survey that how many of those chartered accountants are in favor of new scheme or the old scheme. So the result was not new. Similarly, I would like to know from all the chartered accountants here, from the fellow chartered accountants, are they in favor of old scheme or are they in favor of new scheme? You can give your answer through chat window, sir. Or Ravi, if you want, you can even run some kind of poll here also, because I believe Zoom has the facility to run polls. So only one answer I have received, and that is from Ravi only, that old. Okay, old. Why old? Why we are so much we have so much love for old scheme rather than the new scheme? Aren't new scheme have a better slabs? Only 3 answers I have received till now, from Madhusudan ji, from Ronak ji, and Ravi ji. 4th answer also again as expected, old, right? So only there is one exception also from I don't know what's the name. Ronak ji has given a very classic example that it's like giving one Cadbury and taking one Cadbury and giving one toffee. So liya kuch, diya kuch. So the majority again is in the favor of old scheme. Okay. So it is not as if there is no change in the new scheme also. They have changed the new scheme. Why? To make it more attractive. To make it more attractive. But at the end of the day, whether it is attractive or not, it all depends on one's taxation, right? Particularly if I talk about non-salaried, non-business class assessees, they can always opt for new scheme or old scheme for each year separately. For 1 year, they may opt for new scheme, and in another year, they may opt for old scheme. But as far as business assessees are concerned, or any assessee where there is a schedule in the income tax return of PGBP, they can either opt for old scheme or new scheme one time only. So once you are in old scheme, you have to remain in old scheme forever. Though there is an exit route also available, but that again exit route is one time. So either you can enter one time or you can exit one time. Once you are out, then you are out. Once you are in, then you are in. You can't say, okay, 1 year in, 1 year out, 1 year in, 1 year out. No, that's not possible. But for non-business assessees, yes, it is possible. Yes, it is possible. Now, coming back to this slide, from 7 slabs, they have reduced it to 6 slabs. So basically, the 25% slab they have actually removed. So straight away from 20, it is now 30%. Also, what they have done is, as far as surcharge is concerned, so if in case your income is beyond 5 crore, so instead of 37%, you only need to pay 25% surcharge, right? Also, apart from HU of individuals, this scheme has also been extended to BOIs and AOPs, other than cooperative society, right? And again, as I told you guys earlier, that this is going to be the default scheme. This is going to be the default scheme. If you don't take action, if you don't take action on time, this is going to be sitting on your head. Now, I have also tried to compare what are the benefits available in the new scheme and what are the benefits which are available in the old scheme. So kind of a matrix I have tried to prepare for you guys. So you can take a holistic view of the entire provision and decide whether a particular scheme is better for you or the old scheme is, new scheme is better for you or old scheme is better for you. The first change they have done is with the standard deduction. Till last year, standard deduction was not available under the new scheme. So from this year, they have also introduced. So from this year, they have introduced standard deduction even for salary under the new scheme. Till last year, only under the old scheme it was available. So from this year, from assessment to 24-25, not only under the new scheme, even under the old scheme, both the standard deduction of 50,000 shall be available. Then standard deduction of family pension will also be available under the new scheme as well as the old scheme. Entertainment tax, professional tax, now the changes have started appearing. under the new scheme, no entertainment tax deduction is available, though practically there is no entertainment tax. But as far as professional tax is concerned, and I believe in your state, professional tax is there, right? Right, Ravi?
Yes, sir. In Telangana and Andhra, it's there, sir.
In certain state, they are still levying professional tax. I believe in Maharashtra it is there. In Karnataka it is there. Telangana you have already talked about. In Delhi there is no professional tax. In Haryana there is no professional tax, though they contemplate every year that we will impose professional tax, but till now it is not there. Again, a very major blow to salaried class. Why it is a blow? You all know why I'm saying it is a blow. No benefit for HRA, no benefit for LTA. So under the new scheme, there is no benefit for HRA or LTA. And it can be a major decision maker. And it can be a showstopper also. Again, if you have any income which is clubbed in your hand as far as your minor kids are concerned, there is an exemption available of 1,500 rupee. So that exemption is also gone as far as new scheme is concerned. Coming to the depreciation part, the business assesses normal depreciation. Yes, it is available both under the old scheme and new scheme. But additional depreciation, which is for electric generation companies and certain other industries also, that is not available under the new scheme. So moving forward, ATC, ATD, ATG, these are the most commonly used Chapter 6A deductions, right? There again, ATGG is also there, ATJJ is also there, and there are so many other deductions also. But the most common ones, the ATC, ATD, and ATG. Even other deductions are also not available. So these deductions are not available. So what is available as far as Chapter 6A is concerned? So in the entire Chapter 6A, only 3 deductions are available in new scheme, and that is ATCCT2. And what is ATCCT2? It is the NPS which you invest in through your employer. Tier 1, Tier 2, there are certain tiers of NPS also. So if you are having an NPS through your employer and you also invest in there, your employer also invest in there, therein you get the deduction. That deduction is still available. Section 80CCH, this is a new section which has been introduced this year for Agniveers, and it is applicable for assessment to 23-24 itself. Then section 80JJAA. So only these 3 deductions are available under the new scheme as far as Chapter 6A is concerned. All other deductions are gone. Section 24. Even section 80EEE, since we are talking about section 24, even section 80EEE is also gone. Section 24. Now, under section 24, you claim deduction for interest you have paid against your housing loan. Now, a property can be a self-occupied property. A property can be a let-out property. If it is a self-occupied property, again, up to 2 properties are allowed to be self-occupied property. So for self-occupied property, no deduction under section 24 is available, which is basically 2 lakh of rupee, or 30,000, it can be 30,000 also. So no deduction under section 24 is available if the property is a self-occupied property. But if the property is a let out or a deemed let out, when it is a deemed let out, when you have more than 2 properties, and the third one is treated to be a deemed let out. Though you can decide which property to be qualified as self-occupied and which to be treated as deemed let out. Anyway, that is not our question today. So the question is whether the deductions under section 24 is available or not under the new scheme. As far as let out is concerned, as far as deemed let out is concerned, yes, it is available. And since it is available, similarly, if you have a rental income, the standard deduction will also be available. Even though that section has no reference, that particular subsection has no reference to section 115 BSE, but the natural corollary is that if it is a self-occupied property, there is no rental as such. And if there is no rental, there is no question of standard deduction. And since there is a rent, there will be a standard deduction, and similarly, deduction under section 24 will also be available. And also set of losses It is also available. So I believe this metrics can help you decide whether you should go for the new scheme or whether you should go for the old scheme. Now they have tinkered with the rebate also. And again, as far as rebate is concerned, under section 87A, it is the new rebate is only and only available for new scheme. But please mind it, there is no marginal relief. So up to 7 lakh of rupee, if you have the total income of 7 lakh of rupee, there is no requirement to pay any taxes. But the moment your income is 7 lakh 10 rupee, immediately rebate is out of the window. Immediately rebate is out of the window. Any question till now? Any question till now? Okay. Let's move further. So, if we talk about insurance industry in India, 98% of the insurance products in India are basically investment products. Meaning thereby, if we talk about pure insurance product, pure risk product, which are called as term insurances, hardly 2 or 2.5% of the entire industry is towards term insurance. Earlier, it used to be 1.5%, but they have improved it to 2.5% now. So hardly 1% increment is there. Partially because people are not aware that insurance should be a pure insurance. Second, some insurance agents also doesn't like term insurance. They don't like to push term insurance. Reason being, the commission as far as term insurance is concerned, it's on the lower side as compared to the investment product. Reason may be, and there can be a number of reasons, but the situation is in today's insurance industry, more than 97% of insurance which is being sold today is only an investment product, right? So even a few days back, prior to this budget, I was receiving many WhatsApp messages. Okay, you invest this much. After 20 years, you will get this much. You invest 20,000 per month, you will get this much of amount that much. And what kind of message they were delivering? Okay, your daughter has to be married after so and so years. You need to send your son for higher education at so and so. You see the colonial mindset we still have, right? So they are basically trying to sell on your emotions. So till now, anything you receive on the maturity of your policy, I'm not talking about at the time of death, right? I'm only talking about at the time of maturity. So let's say your policy has matured and you're still living, right? And you get a lump sum amount from LIC, which is basically the sum of the amount which is assured to you, plus a bonuses which get accrued on your policy. So you get that amount, and that amount is totally exempt. That amount is totally exempt. Now they are restricting it. They said that this provision is being misused. So now they are basically putting a cap to that. And what is the cap? The cap is any policy which is issued after 1st of April. 31st of March 2023, which means any policy which is issued on or after 1st of April 2023, and annual premium for this policy which is issued after 1st of April 2023, annual premium in any of the year. So let's say you have taken a policy for 10 years, right? And you are paying premium only for 2 years. You see, there are certain policies today in the market which say that you can either pay the premium for the entire 10 years, or you may even pay the premium for 5 years, or you may even reduce the premium to 3 years. And even one-time premium pay policies are available. So what it is trying to say is that in any financial year, during the term of the policy, if the annual premium is more than 5 lakh of rupee, more than 5 lakh of rupee, then this exemption shall not be available. You see, till now, they have already excluded two kind of policies out of the exemption. First, in case the annual premium is more than 10% of the sum assured or 15%, as the case may be, then again, those policies are out of picture. No exemption under section 1010D is available. Similarly, no deduction under section 80C is also available. Both these policies are out of the picture. Both these policies are out of picture. Secondly, 2 years back, even ULIP policies where annual premium was more than 2.5 lakh, they were also kept out of section 1010D. Now, any other policy, which is basically a investment policy, I'm not talking about the pure risk, because in pure risk, generally, in pure risk, they don't pay you anything if you survive policy. In fact, in recent times, in order to sell more term insurance, they have also introduced one provision that in case you survive the period of a policy, we will return entire premium to you. We will return entire premium to you. So if so is the case, then again, those policy will also qualify, provided the annual premium is more than 5 lakh of rupee. So what is important is the annual premium, not the amount you are receiving. You may receive 1 crore rupee, you may receive 50 lakh, you may receive 10 lakh. But what is important is how much annual premium you are paying. Again, it may be possible that in 1 year, the premium is higher, and for other years, the premium is lower. So whatever is the highest premium, I have to see. So what is the highest premium? I have to see. So if you look at amendment which was brought in 2 years back by Finance Act 2022, they had amended as far as ULIP is concerned. Post that, they had issued circular number 2022, wherein certain examples were discussed. Around 11 examples are there. They have tried to explain the new provision. And same circular has also been referred to in the explanatory memorandum while introducing this provision. So my humble request is that you should also read this circular in entirety, because it's a very long circular. I can't squeeze the entire circular in 1 or 2 slides, though I have tried to capture the essence of that circular here. So what this circular is saying, that in case some received, again, the test which you have to apply, it has to be applied in the year when you are going to receive this money. Not today, when you are buying this policy, not today, but at the time when you are receiving the amount in respect to that policy. First, the policy we are talking about, it must be after 1st of April 2024. यानी कि 1 अप्रैल 2024 से पहले की कोई भी जो पॉलिसीज हैं उस पर ये कानून लागू नहीं होगा. They will be treated as if they were being treated earlier. तो आपको ये टेंशन लेने की जरूरत नहीं है कि जो पहले वाली पॉलिसीज है उनका क्या होगा. So whatever bad happen, it will happen only with the policies which are going to be issued after 31st of March 2023. So that has been, so that portion has taken care of your transitory part. So any sum received during the current previous year under one eligible policy. अब one eligible policy का मतलब क्या हुआ? It means the policy which was issued after 1st of April 2000, first on or after 1st of April 2024. And obviously, the annual premium was less than 10%. It is not a ULIP policy. And the amount of premium payable on such eligible policy in any financial year is less than 5 lakh rupee. Then such amount, any amount received on such policy is an exempt policy. Second case, eligible policy, annual premium more than 5 lakh, it is taxable. It is taxable. Now, we're also smart. We said, why I need to take one policy of annual premium of 5 lakh. What I will do is, I will divide this policy into 5 parts. 1 lakh, 1 lakh, 1 lakh, 1 lakh each. Government is also smart. So what they have provided is, in case during 1 year, you receive an amount from multiple policies where the consolidated, the aggregate amount of premium in all those policies during any of the financial year is more than 5 lakh, I mean less than 5 lakh, then it is exempt. If not, then there are certain example in what situation it will be exempt and in what situation it will be taxable, and which policy is taxable and which policy is exempt. So it's a very complicated situation. So you need to go through this circular number 2022. There are 11 examples which have been given there, and you should also read them. I think मुझे जल्दी जल्दी करना पड़ेगा. Already it's 4-5, right? Acha, now the question is, what if the policy is not exempt? What to do? Answer is very simple, sir. Whatever sum you have received minus the amount you had paid towards premium will be taxable as other sources, Capital gains. Now let's talk about the changes as far as capital gain is concerned. Any question till now, sir? Raviji, it's okay now if I'm asking for the question here. I believe so that later on these questions are put to rest.
Yeah, it'd be good.
Okay. So you see, when we are talking about certain topic and the question are raised then and there, unless and until it leads to unnecessary discussion, I believe it's productive to discuss those questions then and there itself. Rest up to the organizers.
Agreed, sir.
I'm sorry.
Hello, sir.
Yes, please.
This is Ronak Agarwal, this side.
Ronak ji.
I want to know whether 194 DA TDS provision also would be applicable.
No, sir. Sorry?
I would like to know whether TDS provision under 194 DA would be applicable for the taxable portion.
Sir, if I look at 190, you see, with this change, they have not changed 194 DA.
Okay.
Let me read, and since you have raised the question, let me read 194 DA also, whether I will be able to give you an answer or not. Prima facie, it seems it should not be applicable here.
Okay, fine.
Unless and maybe one day or later they may also amend it. If not today, rest assured.
Thank you, sir. Thank you.
You see what it says? Any person responsible for paying to a resident any sum under a life insurance policy, including the sum allocated by way of bonus on such policy, other than, please read this line, it is very important. Other than the amount not includable in total income under clause 1010D. So it very clearly says, if a policy is not exempt, it will be covered by section 10DA. So 194DA, I'm sorry, 194DA. So in case the annual amount of a single policy is more than 5 lakh, insurance company will deduct the TDS there itself.
Thank you, sir.
But the question may arise that if, let's say, there is the amount of premium is less than 5 lakh, what will happen? So there it may open a question. But as far as policies where annual premium is more than 5 lakh, yes, it is already covered by section 194DA.
Thank you, sir. Thank you.
Okay, interest, dual benefits not allowed. You see, there are many assessors who are very smart. In fact, I should say they are more smarter than chartered accountants, right? So what these guys were doing is, we all know that under section 24, till the time your property is completed or till the time you take the possession, there is a provision of claiming pre-construction interest, right? You can claim that interest in five equal installments, isn't it? So what some smart assessors were doing is that they were not only claiming that interest under section 24 or 80EE, and I'm just giving one example of pre-construction interest. they were also claiming that interest as cost of acquisition or improvement, as the case may be, at the time of selling that house. At the time of selling that house. So there are judgments which says that till the time property is completed, any interest which you have spent, it can be capitalized. It can be capitalized. But they were claiming two deduction. One, under section 24 or 80EE, as the case may be, and second, again, as a part of cost of acquisition. Now they have plugged this loophole. Now they have said that only one benefit will be given. Either you claim it as a cost of acquisition or you claim it as a section 24 deduction. Now it may open one very interesting question. Let's say the pre-construction interest is, let's say, 15 lakh of rupee. 15 lakh of rupee. It means that for each assessment year, I can claim 3 lakh rupee as pre-construction interest. But at the same time, since this property is a self-occupied property, maximum of 2 lakh is allowed. And on top of that, there may be some current year interest also. So it is quite possible that I may not be availing the entire benefit. So let's say out of these 3 lakh, I'm only able to avail only use 1.5 lakh. So what will happen with the rest of the 5 lakh? Will it be foregone? No. It can still be claimed as a cost of acquisition. And with this amendment, now the law is settled. The law is settled. This is my humble opinion. But as far as dual benefit is concerned, it is gone. 54 and 54 exemption, right? You sell the house, purchase the house within 1 year or 2 years, as the case may be, you get the exemption under section 54. You sell non-residential property, you buy a residential property, you claim exemption under section 54F. You can also claim exemption under 54F. You can claim exemption under section 54E also simultaneously, isn't it? On one single property, there are, let's say, 2 capital gain and there is one single property. You can claim both 54 and 54F also. Anyway, whatever it may be. So now what they have restricted is that amount of exemption under these sections, under maximum deduction, shall be 10 crore of rupee. Shall be 10 crore of rupee. So what they are trying to do is that they are trying to curb the big ticket purchases. But I ask my government with humbleness, all the humbleness, why 10 crore? Is 10 crore a big amount today? Look at Delhi, look at Mumbai. I don't know about Hyderabad, and I believe Hyderabad will also be in more or less in that category. The average price of a 2-bedroom or 3-bedroom in Delhi is not less than 4 crore rupees. It's 3 crore, 4 crore in the range. And it's hardly 1200 square feet, not more than that. So why 10 crore? Why the restriction on 10 crore? Either you should have specified, okay, in certain cities, it is 10 crore. In Delhi, it can be 50 crore. I could have understood. Then, but why blanket ban? Why blanket ban? Right? I'm just contemplating why it is there. Why 10 crore? Why not 50 crore? Because I believe 10 crore is not a big amount today. Earlier, it used to be the time when buying a flat for 1 crore used to be a very big achievement. Today, the average price of any house property, I'm living in Noida right now, right? In fact, across my building, or my office building, certain floors are being constructed, and the rate of each flat is 18 crore rupee. 18 crore rupee. Though those flats 2 years back were of hardly 9 crore rupee. So within 2 years, the rate have skyrocketed. So that 9 crore flat has become an 18 crore flat. So my question is, what is the rationale behind 10 crore? Why 10 crore? You impose it. You can do. I don't say that you can't do. It is your policy decision, but there has to be some rationale behind why 10 crore. Why 5 lakh? Why 2.5 lakh? At least they could have shared that, okay, these are the numbers at which most of the tax abuses are happening. But I believe that 10 crore is not a big issue. At least at least in cities like Mumbai, Delhi, 10 crore is not a big amount. For non-metro cities, I can understand. If you say go to Hathras and 10 crore, yes, 10 crore is a big amount. But if you come to Delhi, even you compare Delhi to Noida, right? There is at least 30 to 40% rate difference. Go to Delhi, the same flat which is available in Noida for 2 crore rupee, it will be at least 4 to 5 crore rupee in Delhi. So much is the difference. Conversion to EGR. Last year, they had introduced provision whereby SEBI was made the regulator for e-gold receipts. So now they are pushing that if you convert your physical gold into EGR, so that at the time of conversion, it will not be treated as a transfer. And similarly, when you convert this EGR into physical gold itself, so basically it's a dematting. So if you demat your gold or if you remat your gold, it will not be treated as a transfer, and the entire period within which you are either having the physical gold or you are having the EGR, it will be treated as one and one only. So let's say I purchased the gold on 1st of February 2020, and today in 2023 I am converting into EGR, right? And let's say after 6 months I am selling it. So from 1st of February 2020 till the time it is sold, the entire period shall be treated as a one period of holding only. Market linked debentures. What smart companies were doing is that instead of issuing the debenture at a fixed coupon, they were issuing the debentures on the market linked rate, right? So these market linked debentures were qualifying as long-term capital assets at the rate of 10%. So again, they have plugged this part. So any transfer, redemption, or maturity of MLDs shall always be treated as a short-term capital gain at the end, again at the applicable. So that benefit of 10%, that arbitrage of 10%, if you compare a market linked debenture with your fixed deposits, you will see the difference. So now market linked debentures are at par with your FDs, Now, again, intangible rights. So in case you are selling any intangible right, the cost of acquisition or the cost of improvement, unless and until you have actually bought it from someone, it will be treated as nil only. If I'm not wrong, there was a famous case of Srinivasa Shetty, whereby the court had held that if there is no cost of acquisition, there will be no capital gain at all. So in order to overcome that judgment, I believe these amendments were brought in. So any goodwill, any intangible asset, or any other right, there will be the cost of improvement shall always be nil. Similarly, in case of cost of acquisition of any other intangible asset or a right, in fact, or loom hour or any right, it is also amended. I could not make it red. So you may read it as red also. Let me highlight it. Sorry. Yeah. So this portion is also amended. This portion is also amended. 44 AD and 44 ADA changes. Now, till now, if I'm a businessman, if my turnover is more than 1 crore but less than 2 crore, if more than 1 crore and 2 crore, then I have two options. Either I opt for 44 AD, pay 8% tax, and then I am not required to maintain any books of accounts or get my books of accounts audited. Or I don't opt for 44 AD, maintain my books of accounts, and then check whether I am eligible for 44AB or not. Whether I am eligible for 44AB or AB audit or not. Again, when you go into 44AB, then there is a test of 5% first proviso of 44ABA. First proviso, whether cash receipts are more than 5% or not, cash payments are more than 5% or, and so on and so forth. Now, similarly, they have borrowed that particular proviso from 44AB and introduced in 44AD. So now till 2 crore, there is no change. Whatever was the law last year, it will still be there. It will still be there. But in case, let's say you have a turnover of more than 2 crore but less than 3 crore, more than 2 crore but less than 3 crore, and your receipts are more than 95% through banking channel. When I'm saying banking channel, it doesn't mean that you simply took the check and that check is not an account pay check. So when I say banking channel, it means either the check should be the account pay, it should be either through the account pay check, or it should be through the bank to bank transfer. Generally, most of the transactions nowadays are happening are not through check, right? Even if you look at your offices, I believe hardly 1 or 2% fees you are receiving is through a check only. If you talk about me, 99.99% of my fees are through NEFT only. So, in case you are a businessman and more than 95% of your receipts are through banking channels, or you are a professional and more than 95% of your receipts are through banking channels. So instead of 2 crore, it will become 3 crore, and instead of 50 lakh, it will become 70 lakh. So professionals who have professionals like us, who have more than 95% of their receipts through banking channel, more than 95% of receipts through banking channels, for them, the higher limit of 75 lakh shall be available, and they can very well opt for 44 ADA. 44 ADA 50%, 44 ADA 8%. In fact, it will be 6% and 8%. Majority will be 6% because we are talking about more than 95% through the banking channels. So that will qualify for 6%, and only less than 5% will qualify for 8%. So that's how this change will happen. But if you're still dealing with more than 5% in cash, you can still opt for 2 crore rupee limit. Now, changes related to SEZ. These are not major changes. Simply that what happening was that even though exemption was available to under section 10AA to SEZ, they were not filing their return on time and still claiming the deduction. So what they have now tried to impose in restriction is that in order to claim this exemption, or deduction, as the case may be, you need to file your return on time. And I believe it's a good change, because if you don't file your return on time, losses are gone. So why special treatment to SEZs, right? Similarly, they said since the majority of the SEZ sales are through exports, so what they have now imposed the condition that they must receive the consideration for those exports within 6 months, or as the case may be, the time allowed by the RBI. In fact, there was a question a few days back that if, let's say, I apply my AD for extension, will it be applicable for this section 10AA or not? You see, merely applying for extension will not cut the ice. In order to qualify, it must be approved. So if you apply and it is approved, then it is treated that, okay, the time limit has been increased. So what if, let's say, a particular amount is not received within six months? So that amount will not qualify for exemption. But what if you later on receive this amount? In that case, section 155(11)(a) has been amended. And it says that in that case, assessing officer has the power to amend the order, to amend the assessment, in case the amount is received after the permitted period. Now, the contentious issue. Section 43B, payments to MSME. So what is 43B? And I have a lot of questions for you guys here. And even I have prepared some case studies. So this is the provision which you will read in case this 43B sees the light of the day. Notwithstanding anything contained in any other provision of this act, a deduction otherwise allowable under this act in respect of any sum payable by the assessee to a micro or small enterprises beyond the time limit specified in section 15 of MSME Act. So meaning thereby, in case you are paying your MSE supplier, I mean micro or small vendor, beyond the time limit prescribed in MSME. When I'm saying MSME Act, it contemplates two situations. One, if you have an agreement, written agreement, I should say what I'm saying written, because even though a verbal agreement is also an agreement, how will you justify it? How will you document it? Whether there is an agreement. So there has to be an agreement with your vendor. If there is an agreement with your vendor, then that time limit to make payment within that agreement or 45 days, whichever is earlier, shall be the time limit under MSME Act. So let's say your agreement says 60 days, then 45 days limit shall be applicable. If your agreement says no, 30 days, then 30 days limit shall be applicable. And in case there is no agreement at all, then only 15 days shall be applicable. There was a question that what if due date is mentioned on the invoice itself. So in my humble opinion, it's an agreement itself. It's an agreement itself. So if invoice says that the payment has to be made within 30 days, 40 days, or whatever it may be, so there is an agreement. And then we will apply the rest limits as far as MSME Act. And in case there is no agreement, then 15 days shall be applicable. So notwithstanding anything contained in any other provision of this act, a deduction otherwise allowable in respect of so and so shall be allowed irrespective of the previous year in which the liability to pay such sum was incurred by the assessee according to method of accounting regularly employed by him, blah, blah, blah. Then, in computing the income under section 28, such sum shall be allowed in which such sum is actually paid by him, provided nothing in this contained in this section except the provision of clause H. So basically, what now they have tried to restrict is, in case, let's say, you are making the payment beyond the financial year, but before due date of filing of your income tax return. So let's say there is an amount which is due. I should not use the word due, I should use the word overdue. Let's say there is an amount which is overdue within financial year 23-24, and you are paying that amount in 24-25, but prior to filing of the return. In that case, as per this provision, overdue amount will first be disqualified or added back to your income in the financial year 23-24, and in 24-25 only it shall be allowed. Had this provision not been there, then even if I'm making the payment in 24-25 and before filing of return, it would have been allowed to me. It would have been allowed to me, like in other case. But this is also a draconian provision, I believe. Now the question is how to identify MSME. How to identify MSME? This is a very contentious issue. Always. We are doing kaise? How do we identify whether it is an MSME or not? So again, this question is not a new question. So in 2008, Government of India had issued one office memorandum where they had said that it is considered advisable that the micro and small enterprises should mention, get printed on the letterhead, supply order sheet, blah, blah, blah. so that they always remain an identification of being an MSME supplier. So the most common method to identify if a supplier is an MSME or not is to look at their invoices. You look at their invoices, you get to know whether they are MSME or not. And I'm not saying that they cannot communicate you separately that whether they are MSME or not. But in case they doesn't communicate separately, but the number is very well printed on the invoice itself, you can't say that, sir, it is not an MSME. It is an MSME. Again, in my humble opinion, it is not your responsibility to go to your vendor and ask them, sir, please tell me whether you're an MSME or not, even though generally we issue such kind of letters to our vendors. It is not required at all. It is his responsibility to tell you, but they may communicate you through their invoices itself. Like, for example, I am registered as an MSME. On all of my invoices, I always write, okay, this is my UAM number. And I also write one letter that one line in my invoices that I am a small enterprise under MSME Act. Please read this case study, then I will raise the questions. रवि जी 1 घंटा ऑलरेडी पूरा हो चुका है और अभी मेरे पास स्लाइडें तो बहुत सारी हैं, तो अभी कैसे करना है आप मुझे बताइएगा. सॉरी सर, आपकी आवाज नहीं आ रही रवि जी. नहीं जी, चली गई है. आप कार ड्राइव कर रहे हैं क्या?
नहीं मैं
नहीं, फिर चली गई. हेलो,
अभी आ रही है सवाल.
हाँ आ रही है, लेकिन थोड़ी रिमोट है. आ भी रही है, जा भी रही है.
I'm not sure what is the issue.
आप थोड़ा लैपटॉप के पास आके बोलिए ना. चलिए, इन द मीन टाइम जब तक रवि जी अपनी टेक्निकलिटीज डिफिकल्टीज को दूर करते हैं, लेट्स गो बैक टू सो आई हैव टेकन वन एग्जांपल वेयर द नेम ऑफ द बायर इज Messrs. Daksham. The name of the vendor is RBL. RBL is nothing but Ravi Bhulusaria Ladia and Company. There is no written agreement between Messrs. Daksham and Messrs. RBL and Company, right? And all these facts are very important, sir. So financial year 23-24 is the first year when Section 43B will come into picture. So on 1st of April 2023, there is an opening balance which is payable by Messrs. Daksham to Messrs. RBL and Company for 5 lakh of rupee. On 12th of April 2023, a payment of 4 lakh rupee was made. On 1st of March 2024, another invoice was raised by Messrs. RBL and Company upon Messrs. Daksham of 12 lakh rupee. On 30th of March, that is within 30 days, an amount of 12 lakh rupee was paid to the vendor. And finally, the closing balance as on 31st of March 2024 is 1 lakh rupee only. My first question is there any disallowance under Section 43B for assessment year 24-25? Please appreciate it is. Please answer the question on the basis of the facts given here. You see, I am only touching the tip of the iceberg. This particular issue can have at least 100 types of case studies. There can be 100 situations where the answers may be altogether different. And that is going to be one of the most cumbersome and the most ridiculous, I should say, the amendment, and which is going to haunt us for a long time in the future to come. In case this amendment goes through. So my humble question is there any disallowance under Section 43B for assessment 2024-25? If yes, then how much? And then on what basis? Yes or no? I am opening the house. I am opening this question to the entire house. I need participation, sir.
Yeah. Good evening, sir. Ronak Agarwal here.
Ronak ji.
According to me, there should be no disallowance, as the expenses which were incurred during 23-24 was 12 lakhs, which was paid by Miss Daksham. So I don't feel there should be any disallowance.
Sir, how did you deduce that the entire amount has been paid? That is my question. If so is the case, then why there is a balance of 1 lakh of rupee at the end of the year? First, you tell me, how did you deduce that the entire 12 lakh rupee has been paid?
In
This example is not that simple, it seems to be. Please appreciate, I am not going to question number B. We are still with question number A only. With question B, answer may be same, answer may not be same. So I'm not giving you any answer. Let me tell you. हाँ जी, आलोक जी, आपने बताया नहीं, रौनक जी सॉरी, कि आपने कैसे ये डिसाइड किया कि 12 लाख का 12 लाख इस इनवॉइस का? Did I write anywhere?
No, sir, you did not write anywhere.
Then how did you deduce it? मैं उस पर भी आऊंगा, उस पर भी लॉ है. I will come to that also. There are certain laws which says how to adjust the payments. And for that, we have to go beyond income tax. Since there are no other answers, let me go to Contract Act. Section 59 of Contract Act. What it says? Where a debtor owing several distinct debts to one person makes a payment to him either with express intimation or under circumstances implying that the payment is to be applied to the discharge of some particular debt, the payment, if accepted, must be applied accordingly. And these illustrations which I'm putting here are from the section itself, from the section 59 of the Contract Act 1872. There are 3 sections, 59, 60 and 61. 59 talks about application by the payer, instruction by the payer. 60 talks about the instruction by the receiver, appropriation by the receiver. Application of payment where debt to be discharged is not indicated. In this case, payer has not indicated how to discharge it. In that case, creditor, the creditor may, the debtor has omitted to intimate, and there are no other circumstances indicating to which debt the payment is to be applied, the creditor may apply at his discretion to any lawful debt actually due and payable to him from the debtor, and so on and so forth. Similarly, section 61, जहां debtor ने भी कुछ नहीं करा, creditor ने भी कुछ नहीं करा. In that case, where neither party makes any appropriation, the payment shall be applied in discharge of the debt in order of time. In order of time. यानी कि FIFO method लगाएंगे सर हम. Whether they are, or again, please appreciate this section 59, 60 and 61. It was taught to us in +1, +2. It was taught to us in foundation. It was also taught to us, if I'm not wrong, those who did not do foundation, I am from foundation stream. I believe it was in intro also. So again, we have to go to the basics. So if you apply 59, 60 and 61, what should be your answer, sir, now? Ronak ji, now I have read the law. And now will you appreciate why I am writing? Will your answer change if Diksham insists that it has made payment on so and so against invoice number so and so?
So in that case, sir, the 12 lakhs will be first applied to the 1 lakh payment due, and the balance 11 lakhs will be applied to the next purchase amount.
Yes. So FIFO method shall be applicable. Yes. Very well said. So in question number A, sir, there will be disallowance. There will be disallowance 1 lakh. Now, why 1 lakh? Why disallowance? Because there is no written agreement, right? So in case there is no written agreement, then this invoice must be paid on or before 15th. Somebody may say 16th also, but I believe it's 15th. So on or before 15th. So on 16th, it became overdue. On overdue. So on 30th, you paid 11 lakh out of it. So it means this 1 lakh belongs to this invoice. And on 31st of March 2024, this invoice is already overdue as far as MSME Act is concerned. And that is why it will qualify for Section 43B disallowance. Now, if I say this 12 lakh is against this only, then the answer will change. Why? You had very well said, since if I read the law, it says a deduction otherwise allowable. Deduction otherwise allowable. You see, in this year, I have only claimed deduction of 12 lakh of rupee. 12 lakh of rupee. That is why 5 lakh has no application, even if this 1 lakh belongs to financial year 22-23. Sir, this law is not so simple. Now coming to the case study number 2. Now here the payment terms are in writing and the payment terms are 30 days. So instead of giving the ledger, I have simplified job for you guys. And now I have given you the invoice-wise aging as on 31st of March 2024. So on 1st of March 2023, invoice number 7905 of amount 120903 was due as on 31st of March 2024, even though out of that invoice, that invoice was paid the very next day. Even though on 31st of March 2024, this invoice is still open. But on 1st of March 2024, if you look at the aging, this invoice is no more there. So this invoice is paid on 1st of April 2024. Similarly, invoice of 3rd of March of 1,20,000, which is still open. My mistake is there. Instead of writing 2024 in these lines, I have by mistake written it as maybe 24, maybe. So my mistake here, sir. Please read this as 24, read it as 24. Similarly, read it as 24 also, please. So on 3rd of March 2024, an invoice of 120 was booked, which is still due on 31st of March. But again, out of 120, 1 lakh is paid on 1st of April 2024. So the question facts, I believe, are clear to all of you guys. So the question is, how much is the disallowance amount? We are talking about financial year ending 31st of March 2024. How much is the amount of disallowance? Raviji, already 1 hour, 15 minutes have elapsed.
Deepak ji, you can continue till 5:05.
Okay. So that's why I'm asking questions in between also. Hanji sir, any answer, please? Sir, no answer. Sir, you need to participate with me. Otherwise, it will become a monologue only. I don't want this session to be a monologue. I want it to be very interactive with all of you guys. You should take something from me. I should take something from you. It has to be a two-way street. Anyway. Okay, Raviji said that the third March invoice would be disallowed. Why 3rd March? Why not 1st March, Raviji? Now he says even 1st March would be disallowed. Very interesting. So as per Raviji, not only for 1st March, even 3rd March invoice will be disallowed. Why? Why, Raviji? Raviji, you can speak up also.
I think it clearly says that the invoice has to be paid. Partial payment has not been specified. So I think both the invoices.
Sir. You are not looking at the entire fact. You simply read that's partially paid. Please see. यहाँ में मैंने दिया हुआ है ना आपको. On 1st of April 2024, Out of this invoice, only 20,000 is payable. So it means the 1 lakh has been paid on 1st of April 2024.
Even then, it is paid in the next financial year. It has
Yes.
to be paid within the same financial year.
Yes. No, sir, ये कहाँ लिखा हुआ है within the same financial year? ये कहाँ लिखा हुआ है? Let's go back to the law. Let's go back to the law. Sir, what is that? What is? एक second. सर ये क्या लिखा है आपने वर्ड?
Okay, so it might not have expired the timeline.
Yes. Yes. Coming back. अब बताइए सर, अब आपका आंसर क्या होगा? Sir, only invoice of 1st March shall be disqualified. That is why I am saying is, sir, the word is due, overdue, due, overdue. Sir, you have to see the overdue position as on 31st of March. Whether that particular invoice is overdue as on 31st of March as per MSME Act or not. So, if I say that payment term on 30 days, it means then after 30th of March, it shall become overdue. So on 31st of March, it has become overdue, sir. But this invoice of 3rd of March, it has not become overdue. Got it, Raviji?
Yes, sir.
And please appreciate, these are the most simplest of the examples. What if tomorrow I say that this invoice of 1st of March 2023 is in dispute? But MSME Act is also says that if the invoice is in dispute, even if you look at the disclosure requirement under the Company Act, you will find there is in one line item where you have to say that, okay, how much amount is in dispute? Isn't it? So it is going to be a hell of a task for all of us. It's not simply the disclosure part. It's now beyond that. And we are not talking about the companies only. We are not talking about individuals. We are talking about firms. We are talking about corporate society and so on and so forth. Now, what will be the answer in case these payment terms are not in writing? So let's say let's forget that these payment terms are there. So what will be the answer, Raviji, in that case? Will it still be the same?
I think both would be allowed in that case because 45
No,
days is mentioned.
No,
under-
sir. In that case, 15 days shall be applicable.
Not 45 days as per MSME
No,
Act.
no. 45 days is applicable only when there is an agreement. If there is no agreement, 15 days. Yes. Think about 15 days. You see, look at the companies where you see from the day goods are inverted and the invoice is captured in the accounting system, at least there is a gap of 60 days. At least there is a gap of 60 days. A couple of days back, there was an example. Somebody asked me, what if, let's say, I purchased goods from a vendor, MSME vendor, with whom I have a terms of 60 days, right? So it means that effectively 45 days are available as far as MSME Act, right? I purchased those goods during the year, and as on 31st of March, that timeline of 60 days has not yet elapsed, but the timeline of MSME Act has elapsed. So as on 31st of March, those 45 days are over, but the terms of the payment with my vendor are still not over. And that entire 1 crore shall be added back. And I am earning, in fact, I am only earning 3% out of that. So earning is 3%, disallowance is 100%. Think about it. I think trade has to vigorously oppose this provision. Otherwise, it will become a hell for all of them. Or they may, actually, it may be, rather than being a beneficial provision, it may be counterproductive for MSMEs also. Like in the case of GST, if you are a quarterly filer, I used to say, no, boss. First, convert yourself to the monthly filer, then you come back to me. Similarly, I may say, okay, you are MSME. Sorry, boss. Haath jodwa lo mere se aap. I don't want to do business with you. Because you see, you have to understand the business conditions also. You have to see the customs also. And there are certain industries where payment terms are of 3 months, 4 months, 45 days, 90 days. And it is as if not that I am buying the goods on 90 days term, but I am selling it on cash. No. If I'm buying the goods on 90 days cash, I'm also selling those goods on 90 days cash. It's a cycle, right? Anyway, again, there is a question. What about the provisions? What about the provision? Sir, if you look at, even though I have written the opinion that 43BH shall not be applicable, but can somebody tell me why 43BH shall not be applicable? Sir, Raviji, you have any answer to this question? Anyone? Like chat me answer. Let me see. Raviji said invoice has not been submitted. One answer can be this also. Sir, ek aur answer bhi hai iska. Again, we have to read the law. Sir, what it says? Payable. Merely making a provision will not make it payable. It is accrued but not due. It is accrued but not due. And accrued but not due is not payable. There is a difference. So it has to be due also, sir. Chali, sir, let me wrap it up. I have only 10-15 minutes. Any question till now, sir? Anyone? Any question till now? Okay. So let me quickly go through the slides. First of all, the timelines for your assessments have changed. Till now, it was 9 months. So from assessment 22-23, so instead of 9 months, your assessment can be completed within 12 months, right? And in case somebody has filed an updated return, and for that updated return also, the revised timeline shall be applicable. Assessment timelines, again, it is in relation to your search seizure cases. So in case where assessment or reassessment is pending on the date of initiation of search under section 132 or making or requisition under section 132A, so that in that case, the period shall be extended by 12 months also. I think I have repeated or I've gone back. I believe. Okay. Timeline to file section 140. You see, till now, under section 148, AO issues you a notice under section 148. He generally gives you timeline of 30 days. But again, if you don't file the return, you may file it after 30 days also, and it is generally accepted also. Since there was no timeline prescribed under section 148 within the act itself, now what they have said is that a return under section 148 can now be filed within 3 months from the end of the month in which the notice was issued. So let's say notice was issued on 15th of March 2023. In that case, the limitation shall be on 30th of June. And again, this timeline can further be extended by AO if you make an application with the AO. That, okay, I'm not able to file this return within so and so time because of so and so reason, kindly extend this time. And in that case, time can be extended. And in case you don't file any return, it will be treated as void of an issue. Or in case you file the return after the timeline, it will be treated as void of an issue, right? It is already written. Any return furnished beyond the period. shall not be deemed to be a return under section 139. Section 184, 149 vis-a-vis section 148, where search is initiated under section ये मैं छोड़ रहा हूँ, इसमें ज्यादा दिमाग नहीं लगा रहे हम. हाँ, JCIT appeal. You see till now again मैं इसको ऐसा कहूंगा कि पुरानी बोतल नई शराब, या नई बोतल पुरानी शराब, ऐसे भी कह सकते हैं. So we all know for the last 3 or 4 years, CITs are overburdened with appeal, partly because of this faceless appeal mechanism. I haven't attended to any appeal of mine in the last many years. My clients are chasing me, sir, appeal kab hogi, sir, appeal kab hogi, but I have no answer to them. Even though they have recently opened the window, but only for the purpose of filing of the submissions, nothing more than that. You can assume to file the submissions. In order to clear the deadlock, this overburden, the under capacity of the CIT appeals, they have now created a new authority, JCIT appeal. If you remember, those who used to, who used to practice in the earlier days also, or maybe who have qualified 15-20 years back, that there used to be DCIT appeals also. There used to be 2 authorities, DCIT and CIT, right? If the order was passed by an ITO, it used to go to DCIT appeal, and in case order was passed by deputy commissioner or higher, it used to go to CIT appeals. Then they abolished DCIT and simply CIT appeal was established. Now they have again recreated 2 categories, CIT appeal and JCIT appeal. The only thing is that JCIT will not handle each and every kind of order which has been passed by ITO, but up to a particular size only, right? Similarly, they will shift certain case loads from CIT appeal to JCIT appeal, and as soon as this act is passed, they will issue the notifications, and appropriate rules shall also be made. Again, against these 4 kind of orders, no appeal was applicable, allied with ITT, only writ was applicable. So now they have changed the section, and within the act itself, they have now provided that appeal can be filed before ITT against these orders. TDS, TCS, the major change is overseas tour, right? Till now, overseas tour, any kind of overseas tour, it used to collect 5%. They used to collect 5% of TCS. Now they have changed it to 20%. Mammoth, 20%. And in case, God forbid, the person who is buying the tour doesn't have that PAN, it will increase to 40%. 40%. Can you imagine? You're going to Dubai, 1 lakh tour, 40,000 tax or 20,000 tax. So I believe it's a very draconian provision. Rest of the provision of section 2061G are still there for education purposes. If you've taken the loan and you are claiming any deduction under ATE, that rate is still the same. And again, there is no threshold. If you are buying tour for 50,000, if you're buying the tour for 1 lakh, if you're buying the tour for 2 lakh, whatever may be the amount, straight 20% TCS shall be there. And if you don't have the PAN, it will go to 40%. This is a welcome change. So what happened is, let's say I provide the services to my client in the financial year 22-23, right? Now client is following, let's say, cash mechanism, and they say, sir, we will deduct the TDS in the year when we are making the payment to you. So I am accruing my income in financial year 22-23. He is deducting the TDS in financial year 23-24. How could I claim the TDS? It was a major challenge. So now they have relaxed the condition, and they are going to amend section 155, providing that in case income has been offered in, let's say, year 1, TDS has been deducted in, let's say, year number 2, then either in year 2 or year 3 or year 4, you may claim this amount as TDS. And for that, you have to move an application with the AO under section 155. Mechanism they will definitely provide separately, right? So we have 154 application. So we will be having a separate 155 application in the coming days, right? So in that case, you can claim that TDS. Obviously, changes in return will also come because that TDS will be appearing in year 2, 26 years. It will be appearing in your ITR 26, I mean, year 2 also. You have to specify in which year you are going to claim this TDS, right? And in which corresponding year the income was offered to tax. So but overall it's a welcome change. तो रवि जी आई बिलीव यहाँ पे मैं इसको रैप अप कर दूं. अभी भी कम से कम मेरे पास 10-15 स्लाइड्स और हैं. रवि जी
Deepak ji, you can continue for another 5-10 minutes.
ओके ठीक है जी. सो टीपी रिपोर्ट जब भी कभी असेसमेंट होती है, whenever there is an assessment or there is an appeal, you see you have to submit your TP study. Till now 30 days were given, and on another application another 30 days were extended. So now instead of 30 plus 30, it has been brought down to 10 plus 10, and I believe 10 days are too less. Gift by resident to not ordinary resident. So in case you are making any gift to a NOR, I'm not talking about NR, I'm talking about NROR, no resident only. I mean, not ordinary resident, but not or resident, but not ordinary resident. Isko hum bolte hain, right? So if you are making any gift to such a person, it will be taxed in India only. It will be gift in taxed in. It will be taxed in India only. Again, let's say I am a company and I am issuing a share, right? So as far as FDI was concerned, section 56(2) subclause 7B was not applicable. So let's say value of the share is 100. I can very well issue that share at 150, 140, 180. Even FEMA provision allowed it. Because as per FEMA provision, the value of the share has to be bare minimum at the valuation. So if you are issuing the share beyond the valuation, no problem at all. But now they have imposed this restriction for non-residents also. So in case of FDI, now it's a very important provision that you don't issue a share beyond the valuation. So valuation shall be the sacrosanct. So you see what earlier people used to do is they used to issue share at the premium to non-residents. Now, as far as valuation is concerned, valuation can be at any accepted international valuation principle. So even I have done it for many clients that we used to get the valuation report at a net asset value rather than the cash value method. So in net asset, it's a new company. The valuation generally used to be 10 rupee only, and we are issuing the share at 500 rupee, 300 rupee, right? So that will not work now. We have to have the valuation at the same price at which we are issuing. You see why I'm saying at the same price? Because as per income tax, you can't issue beyond it, can't issue beyond the valuation report. But at the same time, FEMA say you can't issue below the valuation report. So let's say valuation is of 500 rupee. FEMA restricted to issue it below 500. So I can't issue it 499. Though income tax allow it. But income tax says now the amended provision said you can't issue it at 500, though FEMA allows it. So I am stuck with 500 only. So whatever is going to be your valuation, it has to be the exact same price at which you can issue the share to your non-residents. Online gaming shall be taxable now at the straight 30%. At straight 30%. Similarly, they have introduced the provisions for TDS as far as online gaming is concerned. For startups, now instead of 7 years, you see, generally if I read the law 79, section 79, it says if there is any major change in the shareholding, right? Major change in the shareholding. So if there is a shareholding, more than 50% shareholding is changed, in that case, let's take an example. Let's say there are two partners in a company, A and B. A is having 51% and B is having 50%, right? And the same way there is C also. So if there is a shareholding change in shareholding pattern more than 51%, then if there are losses, these are not carry forward. But in case of startup, it is an eligible startup and approved under Section 80 IAC. Then, in case all the shareholders are still there, which were at the time of the loss, then these losses can be carried forward, but not only for 7 years, even for 10 years now. So this is the major change. And with this, my presentation is over. I think, Raviji, I have completed within 1 hour and 4 minutes, 1 minute prior to the time given by me. Thank you so much.
Thank you, Deepak ji. We would like to ask our participants, if you have any questions, you can put the same to Deepak ji through your chat box now. If anyone has any question, you can put it.
One of my rapid round session.
Deepak ji, I would like to ask one thing.
आपकी pictures freezed hai. Can you? I think
Not sure. Okay, my laptop's got stuck or something. So.
Camera off kiya hua shayad.
Okay, I'll just like to ask, is this 5627, wherein they have included the non-residents, is it to curb the startup fundings which are being done, or what is it done?
It was being misused. I have received many notices during the assessments that they have issued that, okay, boss, you have issued this. You see the gap. Valuation says 10 rupee, you are issuing it 500 rupee. And again, you know that it can't be checked. So I don't want to go into the nitty-gritty that how it can be, the money can be brought in India. So now basically, you see, the position is at par with residents. But they should bring in something for startups also. Let's see.
Yeah, because startups stand to lose from this, because whenever funding was being done from outside India, a lot of startups would just raise money at XYZ valuation. But sir, now again, many startups will think of going outside India, because a lot of time.
Now you see, you have to justify your valuation also, no? That's the whole purpose is there.
See, I think in startup scenario, you also are aware that the justified valuation is whatever is negotiated between the promoter and the funder.
I understand.
So that way it will become a little difficult. Many more startups will head outside India again, I think.
Sir, हमने बड़े-बड़े challenges देख लिए, ये भी हम टाप लेंगे. I don't want to discuss everything on the forum.
Okay. Any other questions participants may put? Please put on the chat box, or they can unmute themselves also.
Podar ji कब आ रहे हैं?
Podar ji is already there.
Okay, good.
Okay, in that case.
रवि मैं इजाजत भी लेना चाहूंगा सर.
Yeah. In that case, I would like to thank Deepak ji for sharing his valuable inputs. I think 2 draconian provisions have been put forward by the budget, one through 43B and the other through 206C, both of which are going to test the patience of business communities and professionals alike. Thank you so much, Deepak ji, for sharing so much of your valuable inputs. It was really an amazing session and a lot of knowledge sharing for all of us. Thank you so much.
Thank you, Ravi, and thank you, Agarwal Sabha Manch. Thank you.
Okay, I'll like to hand over to Ronak to introduce our next speaker, Dr. Avinash Podar.
And I will share the PPT with Ravi, and it can be circulated with all the members.
Yeah, we'll add you to our group also, Deepak ji.
So thanks a lot.
Okay.
Yeah, good evening, everyone. It is my great honor to introduce to you all Dr. Advocate CAIP Avinash Podar ji, who is also an insolvency professional, who is going to give us insights about the indirect tax amendments. He is currently practicing as an advocate in the field of indirect taxes, commercial laws, and cybercrime. He is having an experience of more than 2 decades in this profession, 17 years as CA, followed by in the profession of advocacy. He is regularly appearing and arguing before the Honorable Supreme Court and various high courts. He is based out of Ahmedabad, Surat, and also having branches and associates all over India. He practiced as a chartered accountant for almost 17 years in direct as well as indirect taxes. And since April 2017, he is practicing as an advocate. In short span of time, he is having many landmark judgments in his name. He was also invited as a speaker in E-Summit 2018, organized by IIT Mumbai. He has also authored many books, including a very motivational book titled Unleash Your Hidden Potential, which was released internationally in June 2017. He is also a winner of prestigious TIOL Gold Award in TIOL 2021 awards in the category of intermediaries and facilitators. Now, let me hand over the session to Avinash Poddarji to provide his inputs on indirect tax amendments.
Thank you. Thank you, Ronakji. I hope I'm audible.
Yes, sir.
Yeah. At the outset, I would like to thank the entire organization, more specifically Vivekji, for considering me and giving me this opportunity. And obviously the entire committee. Now, as we all are chartered accountant, most of us are chartered accountant, if I'm not wrong. Certainly it happens that a chartered accountant used to be more inclined towards direct taxes. And now it becomes almost a necessity that they are bound to also participate in the indirect tax proceedings. Earlier, that was not the scene. The scene was that they used to do only audits and they were concentrating only on direct taxes. In indirect taxes, the chartered accountants were not there. But now, after the implementation of GST, I personally believe that now every chartered accountant is getting involved to some extent or to the large extent, it doesn't matter, but yes, they are involved. And therefore, I very clearly remember that when I started my career long back in 1999, we used to hear only the direct taxes sessions, and there were rarely sessions on indirect taxes. Then slowly and gradually after 2012, when the negative list of GST of the service tax came, people started showing their interest and many chartered accountants started coming. The young bloods were started participating in the indirect taxes also. But still we were observing that there was not much public who was inclined towards the indirect tax. But now GST. Now the unfortunate or fortunate, I don't know, but the important aspect which I would like to point out is that after the introduction of GST and after the introduction of Article 279 capital A in the Constitution of India, wherein the entire powers were given and handed over to the GST Council, we were expecting that now in budget there will be no changes. And budget will be absolutely silent, which will remain absolutely silent so far as the GST is concerned. But to our surprise, it has not happened. And every year, one after the another, the GST Council is announcing or recommending something, and then there is a change in the law which is being proposed in the finance bill. And similarly, most of the announcement which they have done in 48th GST Council meeting, they have brought in by way of this finance bill, which starts from clause 128 onwards, the indirect tax proposals. Specifically, my endeavor today would be to deal with the CGST and the IGST proposed amendments, nothing beyond that. And I do appreciate that the time also needs to be respected. At the same time, I do have some preoccupations also, but I'll try to cover up at least the amendments which I think are most relevant so far as our understanding of GST changes is concerned. And kindly excuse me because I am having a sore throat due to traveling and the schedule. So please bear with me for the same. Now, friends, we all will appreciate that GST Council has the power in GST to do anything and everything, to decide anything and everything. But still, the Constitution says that you will have to place before the House of Parliament, it has to be approved from there. Then once it is approved, it has to be assented by the President, and then the entire process or the entire procedure has to be followed. That is what they are doing now. And rightly so. If we talk about the amendments which they have proposed, the first amendment can be taken in a positive sense, that they have tried to amend section 10, subsection 2, clause D, and section 10, subsection 2, capital A, clause C, wherein the words were goods or, like, the purpose was composition dealer. And when a composition application is being made, there were certain conditions which were imposed on the person who is applying for the composition. And one of those conditions in section 10, subsection 2, clause D was that he cannot make a supply through the e-commerce operator. Now that has been done away with only in case of goods. So therefore, any supplier of goods can apply for the composition provided he conducts the supplies intra-state, either via electronic commerce operator or directly. So therefore, this is the first proposal as per clause 128 of the Finance Bill 2023, wherein they have proposed to amend two subsections, section 2 and subsection 2, capital A, clause D and clause C respectively, wherein they have deleted the words goods or, meaning thereby in cases of services, the restriction is still there, but in case of goods, the restriction has been removed. Moving further, they have came out with one more proposition in section 16, subsection 2. Now, friends, please appreciate. Maybe I don't know, I'm understanding it right or wrong, but one thing is very clear. Time and again, we are finding instances wherein the government is acting first and then trying to ratify their acts, which was beyond the authority of law. Now what they are trying to do is, section 16, subsection 2, they have tried to rationalize this, they have tried to synchronize this with the amended rule 37. And now they say that in case the person fails to make the payment of tax along with the duty or the supply value, within a period of 180 days, he will have to reverse the same. Earlier, the line was that he will have to add this amount which he wants to reverse. Like reverse is the word which is commonly used, and therefore I am using it. But the legal terminology is that he will have to add the credit which he has availed, against which the invoices are not paid within 180 days. He will have to add this in the output tax liability, and along with interest, he will have to pay that. Now, these words have been substituted by the finance bill proposal now, wherein now they are saying that the amount paid should be paid by him along with the interest under section 50. Now, friends, there are two aspects which I would like to cover. First, this is already disputed. It is pending before the court of law, that how you can make the timelines for making the payment under a contract. If there is a contract between a supplier and recipient that will be paying you or we will be discharging the amount in 2 years, how does the government say that no, you will not be getting the credit till 2 years, you'll have to reverse it, that then at the time of finally making the payment, you can take the credit again. So that is a dispute which is already continuing. But what they are now doing is they are all saying that you'll have to pay this amount of tax which you have availed as a credit along with interest under section 50, but they have not clarified under which provision of section 50, whether it is going to be under subsection 1 or subsection 3. So that is something which, as per me, is yet to be clarified. But yes, this is a proposition in section 16(2), second proviso, wherein now they have done away with the word saying added to his output liability along with interest thereon. And now they have replaced these words saying that paid by him along with interest under section 50. Moving further, they have also made an amendment, or rather proposed an amendment in third proviso. And now they are saying that very cautiously you will have to keep in mind that the credit which you can re-avail was available to you when the payment is made by him. That was the word, meaning thereby, if I have reversed a credit because I have not paid the tax and the value of the goods within, let's say, 180 days, I have reversed it, or I have added to my liability, or whatsoever, I have done it. Now, after 300 days, I have made the payment to him. So as soon as the payment is made by me, the credit was to be re-availed. Now they have added a word, added a clause there which says paid by him to the supplier. So if the amount which was outstanding, wherein I have failed to make the payment, is now made by me, that was made by him, the recipient, to the supplier. So they have added to the supplier to this, meaning thereby it has to be direct payment to the supplier. Indirect payment to the supplier may be kept out of this. Now, again, I would say this will lead to lots and lots of disputes, because how to identify? Because there can be a case, because see, what they have done is they have kept in mind all those persons who are absconders, who have issued the fake invoices. Now, all those payments are due in the books of the accounts of the recipient. So therefore, what the recipient will do, he will make the payment of these amounts to some third person, and he will show that the payment has already been made. The account has already been settled. So therefore, they have now put a restriction that you will have to also satisfy the condition to re-avail the ITC, that you have made the payment, but to the supplier and not to anyone else. So that, as per me, can create a lot of dispute, but I'll not discuss it further, looking to the paucity of time, because I need to cover maximum within the restricted time limit. And that is not restriction by the organizers of this meeting, but by myself, because I have some further commitments. Now, moving further to clause 130. Now, what they have done is section 17, subsection 3. Section 17 deals with the reversals and all, that if you are engaged into the exempt as well as taxable supplies, then the proportionate ITC also only can be availed, and the rest of the ITC needs to be reversed back. So in the explanation, what they have done is, the words used earlier were except those specified in para 5 of the said schedule. So the third schedule, which is neither the supply of goods nor the supply of services, that schedule was meant to be exempt, except para 5, meaning thereby, in case if there is any supplies pertaining to para 5, that is land or building, you will have to reverse the credit proportionately or accordingly. Now what they have done is they have substituted, and now they have said except clause 1, the same, the value of activities or transactions is specified in para 5 of the said schedule. It is one and the same which was there. But now what they have done is they have added a second clause to this, which is nothing but clause A of para 8 of third schedule, which deals with the import of goods, keeping it in the customs warehouse, and then exporting from there, or then supplying from there. Even all those inputs which you have availed, maybe CFA expenses or carrier expenses, whatsoever, all those credits which you have availed, you will have to reverse those credits also, because now that is forming part of the exemption. So those will be treated as exempt supply, and therefore the proportionate reversal has to be done. So this is the third amendment, but I would say a bigger proposition, but a rational proposition, because if you are otherwise not doing it, it may lead to something which is double taxation. Now moving further, they have expanded the scope of blocked credit. We used to hear under GST, there will be no blockage of credit. It will be a cakewalk, but nothing of that sort. So therefore they have now added, but at the same time, I would say that they have tried to clarify a dispute, or what I can say, the argument which was there in the, or confusion which was there in the market. So what they've done is they've inserted clause FA after clause F of section 17(5), wherein now they are saying that any taxable person, if he is receiving any goods or services which he is intending to use or which is being used for the activities which are related to his obligation under section 135, that is corporate social responsibility. If those inputs are there, maybe of goods or services, which is specifically for the purpose of section 135 obligation of that person, then in that case, it will be blocked. The credit should not be allowed. Again, there are a lot of discussions which is happening. And nowadays, we all are aware how the WhatsApp can make or how the WhatsApp can destroy. So many messages are flowing on the WhatsApp that what will happen for the past period, whether it will continue, it is a prospective amendment. Yes, certainly it is a prospective amendment. And so far as the past period is concerned, I am of the view that the credit should be allowed. But again, I'll put a rider that the credit should be allowed, provided it is not in the nature of gift. If it is not in the nature of gift, the credit should be allowed till this amendment comes into force. And friends, we all are aware that once this is the Finance Act is assented by the Honorable President, it has to be ratified by the states also, and then it will be notified over the period of time. Once it is notified, then these provisions will come into play. Till that time, these provisions are only for the academic purpose. And therefore, this provision says that any obligation met and the ITC availed for that will not be allowed as an input tax credit. That is something which is clause FA, which has been inserted or which is proposed to be inserted. Now, the next is 131 clause, which again is very, very important. I don't know whether they have removed the anomaly or created more confusion. But as per me, this is a good move. Now, there was a confusion that when section 74 covers an entity or an organization or an individual, that he is mandatorily required to go for the registration. Whether section 24 will override section 23, which deals with a person not liable for registration or not, or whether 22 clause 1, subsection 1 will override section 23 in case the threshold exceeds. What will happen in that case? Now the government has clarified by way of this amendment or proposed amendment. They have made section 23 as a non-obstante clause. They've started with notwithstanding anything to the contrary contained in subsection 1 of section 22, which was dealing with the threshold, or section 24. So, excuse me. My throat is not with me. So, section 24 deals with the mandatory registration. So, it said, notwithstanding anything contained to the contrary, meaning thereby it is overriding 22(1) and 24. This is a good move, and the person is not liable for registration in case he is engaged into complete supply of exempted goods. Say, for example, an advocate or an agriculturist. Whatever he is supplying is exempt. His total supply is exempt. But he may have engaged an advocate, or maybe he has availed a service of GTA. So what will happen in that case? He becomes liable for reverse charge. Question arises whether he is liable for getting himself registered merely for the purpose of discharge of this reverse charge liability. Now it has been answered. Till date, the answer was not there. It was that, yes, for the purpose of discharge of that reverse charge liability, he will have to undertake the registration. But now section 23, starting with a non-obstante clause, clearly says that if he is purely into supply of the exempted goods or services, he may not be required to avail registration under GST law, and therefore he will not be required to pay reverse charge. For example, an agriculturist taking the services of a lawyer, again, reverse charge is applicable to him as per the provisions of section 9394. But in this case, as per my limited understanding, now the law is very clear that once this amendment is there, he will not be required to take any registration for the payment of RCM, and therefore he will not be liable for payment of the RCM. This is my humble reading, and this is the initial stage of reading. Maybe once because I read to be very honest, I read this proposals for the first time today morning, because till yesterday I was traveling to court, so I could not read this. But this is my humble reading. At the first instance, I can say that now it is not required. Further, clause 132, 133, 134, and 135. These are the clauses which have been inserted to add a cap for the statement of outward supply under section 37, that is clause 132. For the returns under section 39, that is 133. For the annual return under section 44, that is clause 134 of the finance bill, and section 52, which deals with tax collected at source, in clause 135. So 132, 133, 134, 135. These four clauses deals with the cap which is now placed of 3 years. That if you fail to file a return or a statement of outward supply or the annual return or your tax collected at source return, then the maximum period for which you can file this is 3 years. Friends, I don't understand why this kind of amendment has been brought in. There can be very positive reasons for the same, because they have to adjudicate within 3 years. If a person keep on filing for 3 years onward also, it will become very difficult to assess. All those things can be understood, but at the same time, I'm of the view that this may also lead to lots and lots of disputes, because it is not as simple as we read. 3 years from the due date of furnishing of said return. So you are restricting me to file a return after 3 years. Let us take an example of an appeal. An appeal has been filed which runs on till 4 years or 5 years. What will happen in that case? Can it be said that yes, the period which was dispute, which was the period of appeal, is excluded and therefore he will be allowed to file? How these systems are going to be organized? Because system has to be read that due date of filing of return, let's say, is April 2020. 3 years completes at April 2023. Now, if it is adjudicated in favor, let's say in 2027 by the Honorable High Court or the tribunal or whatsoever, this period is excluded and 3 years still remains, then can it be uploaded? Because this also will lead to a lot of not only practical and procedural problems, but also I'm of the view of the interpretational problems. Because 3 years from the relevant date again can create a lot of disputes. I'm not going into the dispute part, but yes, section 37, section 39, section 44, and section 52. The amendments are subsection 5 has been inserted in subsection 37, in section 37, subsection 5, which is 3 years cap. And the government, again on the recommendations of the council, may notify certain situations wherein the detail can be filed even after the expiry of 3 years. Section 39, subsection 10 is being inserted. And section 44, subsection 2 is now inserted because it was only having one section. And now section 52, subsection 15 is being inserted into this. Now moving further to clause 136. 136 deals with section 54, subsection 6. Now, friends, we all are aware, and I'm very happy to share that yesterday only I got an order from the Honorable Gujarat High Court pertaining to this 54.6, because recently they have started blocking the credits of the blocking the refunds of the exporters, saying that you are classified as a risky exporter and therefore the amount of refund is blocked. Telangana High Court was the primary judgment which has been given by the Telangana High Court. And now yesterday we got an order from Gujarat High Court. 54.6, what does the provision say? It says that in case of export with payment of IGST, 90% has to be refunded within 7 days, subject to conditions which are there in Rule 91. Anyways, we do appreciate, but at the same time, there was a line there was a line which was inserted in this 54.6, which says that excluding the amount of input tax credit provisionally accepted. So what was happening is, let's say your credit is 2 crores and the credit which was provisionally accepted was, let's say, 40 lakhs. So the refund was to be calculated on 1 crore 60 lakhs, not on 2 crores, because the provisionally accepted credits were not eligible for refunding. Right? So they have deleted this because we all are aware section 41, which was dealing with the provisional input tax credits, have been substituted last year. And now there is no concept of provisional credit, or it was an original concept that the moment you will file 37, you will file GSTR form 2, the GSTR 2, you will get the credit, and all those credits will remain to be the provisional credit unless the invoice is mapped, unless it is masked, and it becomes the final credit. So now this concept is not there. So therefore they have amended and they have deleted, rather omitted, the words excluding the amount of input tax credit provisionally accepted. Section 56, not a very great change, not something to be referred, but section 56 deals with interest. The provision, the sum and substance of the provision is that if the refund is due and within 60 days of that period, the refund is not given, then the interest will have to be paid by the government. So what they have done is they have just reframed this. And now earlier it was from the date immediately after the expiry of 60 days. Now they have done it for the period of delay beyond 60 days from the date of receipt of application till the date of refund of such tax. So there is no much change as per me. They have continued with 60 days. And since they have continued with 60 days, I don't find that there will be any changes. But yes, something which is to be noted and which very relevant is, now they have said that they may prescribe the way and the manner in which the interest is to be calculated, and they may also prescribe the conditions and restrictions. So therefore, till this amendment of 56, it was only that 160 days process, the interest has to be paid. Now they have kept a rider wherein now they are saying that interest is to be paid, yes, but subject to the conditions and restrictions as may be prescribed and the manner in which it is prescribed. So therefore, now they will come out with rules for the purpose of calculation of interest in case of delayed refunds. Now, section 122, clause 138 of the finance bill. We all are aware section 122, 1 capital A was there, which was dealing with the person who is retaining the benefits out of the offenses which have been committed. They are now proposing to insert clause 1 capital B, which is specifically covering electronic commerce operator. It will be dealing only with electronic commerce operator. And they have said that because we all are aware that now they have opened up electronic commerce operator, अब unregistered व्यक्ति भी वहां पे काम कर सकते हैं, composition वाले भी काम कर सकते हैं. They have opened it up. They have broadened the scope for him. The restrictions are removed. So therefore, now they have imposed, or they have classified a new subsection, which is 1 capital B, saying that if an electronic commerce operator, if he is allowing any person to supply goods or services by an unregistered person through him, and that unregistered person is not a person who is exempted from taking registration, then he will be liable for penalty to the tune of 10,000 or the tax for to be varied, whichever is higher. If the electronic commerce operator allows the interstate supply of goods or services through it by a person who is not eligible to make. So for example, composition person, a person who is into the composition dealership or registration, he is not allowed to make interstate supply of goods or services. If he makes it and the electronic commerce operator allows it, then in that case, the electronic commerce operator will be penalized under section 122, subsection 1B. Or if that electronic commerce operator fails to furnish the correct details as per subsection 4 of section 52. So this is obvious. And now they have specifically included that, and the liability would be 10,000 rupees or an amount equal to the tax involved therein. And therefore, This is an important provision to be kept in mind. Next, clause 139. Clause 139 deals with section 132. Since last couple of months, couple of weeks, we are hearing that GST को decriminalize किया जा रहा है. No, nothing has been done. Nothing has been done. Even in 48 GST Council meeting, the amount of 1 crore was getting elevated to 2 crore. I could not find any such amendment in the bill. I'm sorry, maybe I have not read that, but I could not find any such propositions. What they have done is they have deleted 3 clauses from this section 132, and therefore to that extent it can be said that उन्होंने decriminalize किया है. Clause G, clause J and clause K. एक बात करता है obstruction during the course of duty of the officer. एक बात करता है tempering of or modulation of the manipulation of the evidences. And what is the third one? Let me just refer for the benefit of you and me. This is clause G, obstruction. Clause J, receives or is in way concerned with the supply or in any other manner deals with the supply of service which is knows or reason to believe contravention of the provisions of the law. And J, which is tampers with or destroys any material evidences. So if you are dealing with any person for whom you are having the reason to believe that he is acting in contravention of the provisions of the law, then you are supposed to be taken the action of the prosecution, but now it is not there. It has been removed or rather omitted. Moving further, 140, clause 142, 40 deals with section 138. We all are aware in the last GST Council meeting, they have said that for compounding offense, it was 50 to 150. Now they have brought it down to 25 to 100%. That if you are ready to pay in the range of 25 to 100% of the tax which have been imposed on you as a penalty or compounding fee, then you can be out of the prosecution even after you are prosecuted or before the prosecution begins. Now, one dangerous provision that they have inserted by clause 141 is section 158 capital A, which is a non-obstant clause and which says that notwithstanding anything contained in 133, 152 or 158, they are overriding all these provisions which were dealing with the informations to be shared, and they are saying that the following details may be shared. And important aspect subsection 3 says that whatever information you are serving to them, चाहे आप return भर के service कर रहे हैं या जो भी आप informations उनको दे रहे हैं, all those informations can be shared by them in the manner as may be prescribed. But subsection 3 is again an overriding clause which says that no action can be taken against the person, government or the common portal with respect to any liability which is arising consequent to the information shared under this section. So they may share any information which you have filed either maybe by way of section 37 statement of outward supply, maybe at the time of taking registration or annual return or returns. All those information can be disclosed, can be shared now by the portal or the government, but you cannot take any action against the government or the common portal, even if there is some liability accruing to you because of such sharing of information. Now coming to the last limb, which is clause 142. Clause 142 deals with an amendment in schedule 3, wherein they have clarified this. There is just nothing but clarification that this was not applicable. The para 7 and para 8, which was inserted on 1st February 2019, the dispute was what will happen for the period 1st July 2017 till 31st January 2019. They've clarified that these paragraphs are deemed to be substituted or rather inserted from 1st July 2017. So now that dispute does not arise, but yes, still subclause 2 they have added in clause 142, wherein they said that if anybody has paid those taxes, then they will not refund it back. I'm of the humble view, this is absolutely arbitrary provision, because Article 265 says that if a tax. Rather, there is a Supreme Court judgment also which says that something which is collected at tax and finally it is held that this is not, or this cannot be collected at tax, you will have to refund it. So therefore, as per me, this clause which says that no refund will be given is absolutely bad in law. And clause 143, nothing to be deal with, because they have changed the definition of non-taxable online recipient so far as online information and database access or retrieval system is concerned. They have tried to expand the scope by changing the definition in clause 16 of section 2 of IGST Act. And last is clause 144, which is again for the good or for all of us, wherein they have deleted the proviso to section 12 subsection 8 of the IGST Act, which was dealing with the transportation of goods, including mail or courier. The proviso was specifically including or taxing the resident suppliers, but now they have tried to rectify this and they have deleted the provision. They have proposed to omit the provision. Friends, this was clause 128 till 144. And I'm sorry, I was a little bit fast, but I hope that I was able to create at least some kind of value or some information I have shared. Nevertheless, I would again like to tender my apology for not being at the best of my, what I can say, health. So therefore, you all have to bear with that. Sorry for that. Thank you. Thank you for the opportunity. Again, the entire organization committee and more specifically Vivek ji. Thank you. Thank you so much.
Thank you, sir. Do we have any questions for sir? Okay. Hello, everyone. It is my privilege to have been asked to propose a vote of thanks for this wonderful webinar. I, Chartered Accountant Ankur Tibrewal, on behalf of the Agarwal Chartered Accountant Society, extend a hearty vote of thanks to our esteemed speaker, Dr. Avinash Podar, for helping us decoding the indirect tax amendments in the budget 2023. The webinar was very informative and we thank you very much, sir, for your efforts on today's subject. Finally, I would also want to thank Deepak Bhalusaria, sir, and all our attendees for attending the webinar. We hope that such support continues even in the future. Thank you very much. Thank you everyone for attending. Thank you, sir.
Thank you.